Hey, the market's just closed 13 minutes ago. Welcome to the Nasdaq 100 or the Nasdaq Comp right here, down 83.86, the final closing bell. Now we're going to talk about the Nasdaq Comp, which had been much better because of technology and certain kinds of stocks in that Nasdaq 100 and some of the kind of leadership and market cap there that had helped that big move off that bottom there. But here's the thing. Right now, that Nasdaq Comp that acted the best, and it took out its 200-week moving average up here. It's right back here now. And basically, what's going to happen is that this whole move, as we told people up here at the highs, once again, go look at our special series tapes on Nasdaq 100, Nasdaq Comp, or any indexes on dailystockcharts.com, SM Stock Market Funding YouTube channel, and or stockmarketfunding.com itself. There you're going to see that today, that then, and what's today is that the 10-week is declining, the 200-week is that breach right there. This is where we were telling people to sell into the market right here. We peaked right there, bam. We have come down nicely. That green line, the problem with it is it's slanting. You can see the drop in the weekly MACD. You can see that stochastic right here that we use. It's a special one that we program to our mathematical formulas, but it works real well. And when it was at 94.29%, it was so overbought. We were telling investors, we have all those videos if you want to go fetch them. There, it had given people the guidance to be selling out here. And go find those and look at those and then come back and save these and look at what's going on here compared to what we had said over here now. And basically what I want you to know is that the 200-week simple moving average is declining in price. That's that green line. It's very significant. The Nasdaq Comp was one of the better acting indexes during that whole big rally, because when it blew through, it went straight up. Look at that breakout. Got clear up here. It outperformed, in my view, both the Dow and the S&P. The Nasdaq did. And basically, though, right now, this Nasdaq Comp is in a bear trend, people. And it met our qualifier in the trend cycle. There are bull cycles, there are bear cycles, and this is the bear cycle. The qualifier is that we closed 1, 2, 3, 4 weeks below the 10-week moving average, and the 10-week moving average is declining. When the 10-week moving average is flat and you're 1, 2, 3, 4 weeks above it, well, that's a bull trend over here. This is a bear trend now. So if you're holding a 401k or an IRA, or you're just in the market in general, remember that the up moves will be sold short. And we talked about this same indexes yesterday morning in pre-market before the opening bell. And I think that we've given you a snapshot of the year. We had shorted that move down. Stockmarketfunding.com. If you go back to this week and look for the videos, you'll find that we had called that low. It was on a Friday. But that weekly up move right here and a pop back up above that 200 week. Notice the difference in this blue line, which is that 10 week. It kept going straight. It never descended. Notice that over here, that this one is declining. This market, this index is in trouble. Even though that you had a 4-week slide here, you never declined in the 10-week moving average because you didn't. And you started to rise again, ascending upward where that strength would be. Not no more. Sorry. And the 20, the red line, there's a 20-week. This line is a 10-week. And I'm showing you. Declining 10-week moving average, any move up, we're selling short. Why do you think they slid the bid here? Why do you think they slid the bid at the 20-week? Came right up there, slid that bid, kiss goodbye. Look at that. That's this week. And the week is over, and this weekly bar is final. The only thing is that you didn't take out that low, and that was done not last Friday, the Friday before. But this was the low that they were trying to get some juice off of here, but they slid that bid. And Hungarian news, the jobless recovery, you name it, is a contributing factor. However, we got a long ways to go, my friends. And believe me, if we keep declining in this weekly MACD and that 10-week crosses over, this market is toast. That means that the major support level is here at the 50-week. That's where we bounced once and twice. However, if you go look at the S&P and the Dow and look at this pink line there, that's that 50-week moving average now. Okay, this line over here is 100-week and it's still declining in price. Didn't matter that you were breaking and going higher. This market's in very, very grave trouble. And if I get a close, number one, the trend, any up move, you should be exiting stocks and or selling short. What I am going to tell you is that it's a strong index. It's got lots of technology in there, but let's not forget that if those other countries that are really insolvent, if they're not buying a lot of our goods, that means that U.S. tech stocks, U.S. tech companies around the world, you know, they collect a lot of revenues in those regions, and that means that forward-looking earnings aren't going to be there. That's part of the mentality that we have in the stock market right now as far as your investor or trader sentiment. The other thing is that we have slid that bid into a bear trend, and it can get a lot worse. So there's a lot more money to be made on the short side. If you would like to go back and take a look at the Nasdaq 100 videos about 3 weeks ago, right there in April, you could see where we were buying the 2000 put options and the 1950 put options. We have those videos there. Go find them. You'd be making a fortune right now. Remember, these moves are good to make you a fortune that way, but they also make you the same fortune this way. Forget about it. And, you know, you got to know what side of the market to be on and what are the characteristics and the behavior patterns and things that you really need to understand. Another thing that I would say is that we have mathematical range formulas called price ranges, that when those specific key price ranges that are in our SMF formulas at certain prices, they're major price action. When they're broke, bam, that's it. But then again, on the upside, the volatility is to be selling short the volatility, because that's where people are snapping that side of the market. Let's not be in denial about what's going on here. That is what's going on. If you're one holding on the pipe dream, forget about it. Get off that now. Okay? If you didn't listen to us over here when we were telling people to sell, we have the live videos just like the one you're watching now. I'm sorry that you didn't. If you did, I'm glad you listened. This is what was going to happen. Go back and look at all the Dow theory, not the Dow theory, I'm sorry, because we don't use that, but the Dow history that we did, the 10-year history. It's all there at Stock Market Funding. Have a good weekend. Right now it's 1:21 p.m. Pacific Standard Time, 21 minutes after that closing bell. This is the, what? Nasdaq Composite. That green line, if we close below it, there's the 50-week to try to catch it. See, it already wicked down there, but it's in trouble. Watch the 10-week. Watch the 20-week. Watch this. If it increases, call us at stockmarketfunding.com. Get involved. See all the new things we have. We've added many new things to the SMF directory. Find out what they're about.